Hi, good morning, everyone. Thanks for joining us today. We have a wonderful panel today. We have Bernhard from BCG. We have Andreas from Cardano. We have Connor from Binance and Sunny from VeChain. And I am Elisa with CoinDesk. I will be asking the questions. Thank you all for joining us, guys. How are you feeling?
Good.
Good.
Good? Ready?
Excellent.
So I think my first question will be to Andreas. We are at a sort of community event. The community is here in force. And I wanted to ask you, what is the importance of having community? Like, why should you engage them? What do they give to operational resilience that you value at Cardano?
I mean, that's a very good question. And I mean, part of the answer you see in the room. I mean, this is part of the community. This is the community. And I think the community work is actually of essence to evolve and actually to create actually the operational resilience that we try to achieve by having as many members as possible. At the same time, and I think that's one of the parts of the bear market situation, there is a bit of a cleansing happening, a natural cleansing. That means it reduces a bit of the numbers, but increases of quality. So the ones that remain actually are the ones significantly contributing to the success and the evolution. So that's a good thing.
Mm-hmm. Would you agree with that, Sunny? Do you think that communities are engaged in a different way these days?
Actually, not that much, I would say. Honestly, give an example. Last month September, sorry. I was in Token 2049, and honestly, it was like blast. You couldn't imagine this is a bear market or something. Right. Usually, even in the bull market, it's about 4,000 people attendance. Mm-hmm. But this year, I think it's more than 10,000 just for 2 days. The whole place is packed. I think the market is evolving, getting more mature, and also from community members, I would say, they have been more professional, I would say, more like focused on the building. I think that's a key essential, how you're going to go through the bear market, let's put it this way. Mm-hmm. There are lots of things you got to do, like cash management, keep building, because whatever you do in the bear market, you're going to decide how high you can go in the bull market. So I would say bear market is my favorite part, I would say. Less noise, but focus on building. Still lots of engagement, discussions with community members, at least, I'm sure for Cardano and also for VeChain as well.
Mm-hmm. Asia is back, I've heard. So do you think that are there some good ways to incentivize communities, like to participate in this more quality way, perhaps that Andreas discussed? Maybe Connor, you'd like to jump in.
Sure, I think there's many different ways you can get community engagement, especially when you're coming from either an L1 or a project perspective. Interaction with DAO is obviously the most common in terms of being able to drive consensus, making sure that users are ultimately aligned with what's being built and the overall synergies between each. Other elements is obviously investment as well. So if you can get if you think of kind of like traditional finance, you get listen to an earnings call once a quarter, and that's pretty much your maximum engagement with an entity, even if you're an investor to a certain extent. Whereas on the community side, you can be actively involved. It's a good chance that you're in a Discord talking to somebody. You're probably in the same Discord with the CEO, maybe head of product, and they're going to listen. They'll get a feel for what you think in the event of an emergency or a crisis or just a change of events. So you have your hand on the pulse of that community, which also then integrates into your overall product and build, which I think is quite a plus.
Mm-hmm. What is the right balance between the two, like between allowing the community to make decisions and engaging them and them participating in governance, mm-hmm. but also having, let's say, a guiding hand? Maybe Bernhard, you'd like to jump in.
Yeah, happy to do so. So about the word community in general, I think for me the word community is even too light. Yeah. So if you think about it, community are users, they're employees, they're ambassadors of the brand. So it's all combined in one word. So the word community is a little bit fuzzy, but if you think about this, that Web3 is the only industry where all these terminologies are combined into one, which is the community. So layer one should definitely think about how to treat the community nicely and also how to engage the community, because you want to engage your employees, right? You want to engage your brand ambassadors for marketing, right? And that's why you also need to take care of the community, because they are your main brand ambassadors. They are your brand, actually. Yeah? That's why the engagement about the community, it's the same question, hey, do you want to be a very hierarchical CEO? Or do you want to ask your employees where to go? Yeah? And of course, sometimes you have to decide as a CEO, no, let's go that way for this and this reason. But if your employees are not following, then your company is not going the right way. So also here, you need to ask your community like you ask your employees.
How important is that vis-a-vis, say, the financial health of the foundation in being a resilient organization?
That's a good and tricky question, yeah. And every L1 has to find its balance between, applying DAO principles on one hand, engaging the community on the other hand, to be a foundation or being a company that is respected from other companies, to be a good and let's say even traditional partner, so to say. So you have to play in both worlds. You have to engage the community internally, so to say. Outside, you have to show that still you are a company with all the traditional elements and governance and processes that your potential traditional players want to see.
I mean, maybe to add here, I think one of the important things is not just the health of the foundation that is behind it, but it's also having means to incentivize the community. And it's not just like in a bull market throwing out money to any project. It's really about the quality and providing actually substance to the adoption of the respective chain. And in our case, for the Cardano Foundation, what we do with our community, I mean, we have specific meetups all around the world so that we can gather the community, they can gather together, and we're not just giving them funds by doing that, so they actually need to contribute first, and by contributing, we give them then back and incentivize them, but only after they have actually contributed.
Mm-hmm.
Well, I have a few comments on that, actually, on top of whatever Bernard and Andrew has been talking. I think the whole blockchain industry is looking for mass adoptions, right? Mm-hmm. And the mass adoptions, for sure, we start from the community, we start from the startup projects from the community, but also the enterprise adoptions, or let's say try to bring the other side, the traditional world, into the blockchain side is also very important. So how to deal with them, you got to have more professional way in terms of the governance, in terms of the financial management, people management, organization, and everything. Especially if we look back, the regulation world, the regulation environment about crypto has made so much progress so far, which means you have to, let's say, as the layer one, as any kind of crypto players, needs to be playing that kind of way. And then you are able to adopt them, and eventually we can have a mass adoptions. So it's not like you come to me or come to you, it's let's meet in the middle, and then we see how the technology could drive us to which end.
Mm-hmm.
Yeah.
Mm-hmm. Yeah, I mean, in a sense, there is like increasingly more tension between the two worlds, right? Because the more adoption we're seeing, the more regulation we're seeing, which pushes like the formalization of a lot of organizational structures. And then perhaps that makes it a little bit difficult, like to have a very decentralized, genuine community. Would you agree with that?
Not that much, I would say. Yes, it's. I think it's actually. I think maybe Bernard have few comments because in the last few months, Vichen has been working with BCG, especially talking about the governance. We talk about the Switzerland foundation model, right? Which is actually a perfect combination between the traditional enterprise organization and also the DAO, that kind of model. So, I mean, DAO is like everything should be decided by the community. But also we see the challenges in terms of technical deliveries or even regulation side. But from the traditional side, it's a typical traditional enterprise organization. So I think a Switzerland Foundation model is more like how we're going to have a combination or how we're going to find the balance. Something could still rely on the traditional organization or entity or governance, and something could rely on the DAO voting or the community decision. So I think it's a right answer.
Well, I would comment it in the following way, so I totally agree, Sunny, by the way, that the crypto world is now a little bit moving towards, let's say, traditional processes, elements, regulations, and so on. Yeah? And this is something that some crypto players still have to learn to go the thin line, actually. Yeah? Engage your community, be a crypto native company on one hand, but also apply for, I don't know, crypto custodian license, apply for the future MiCA licenses that are out there and so on. So it's a thin line. Yeah? And those companies who are not getting it, that they have to move a little bit from the, let's say, crypto part only and taking care of the community a little bit towards the let's say, traditional world, they might be in trouble, especially with the regulators. But still, how to do that? And my picture here is, so to say, like people are dressing. Yeah? Either you come on stage with, I don't know, a suit. This is more the traditional way. Or you come and walk around with jeans and a T-shirt. That's more the crypto way. So either you wear something in the middle, like I was trying, like a suit and then a shirt, or what else you can do? You can wear a suit, but then you take off the shirt, the jacket, and everything, and then
and
you
slippers.
look. Yeah, and we still have to wear one shoe. So, but what I'm basically saying is that you have to be able to change, and you have to have both in kind of styles at home, yeah, to wear wherever you go the two different clothes, yeah, or even to change at the same event, and that's the same for crypto in general.
Has that line changed in the past year, or
Yes.
is it okay? Yes. How so?
Yeah, quick answer, yes. Yeah, so like 5 years ago, it was crypto and crypto only. So crypto companies for the crypto community, and the regulators were not there yet. And now the regulators across the world are jumping in with different angles, with different approaches, from OpenSea approach up to very restrictive. So they are there now. And also when it comes to mass adoption, it's another point. Yeah, those are different kind of people than the crypto community. Yeah? They have their rules, they have their procedures. They cannot onboard companies that don't comply to those checklists that they have. And they're not changing, the traditional companies, they're not changing their checklist on whom to onboard. Only those players will make the game who will be the first ones who adapt to those checklists.
Connor, would you like to jump in? I mean, you are part of perhaps one of the biggest organizations in crypto that has seen a lot of adoption, but also is facing a little bit of difficulty in the...
Yeah, I've. That seems to be fun. Follows me wherever I go. I started.
Oh, the mic is... Oh,
Oh, there. So effectively, I've seen a lot of the changes. I've seen a lot of the requirements. For me, the way I look at it is almost kind of two buckets. So you kind of have an east versus west to a certain extent. And before I was at Brill, I was at Binance, and I worked in a very decentralized BNB chain, kind of ultra nerdy, deep in the crypto space. And then before that, I was at JP Morgan, actively working in kind of the really heavily regulated markets. So I got to kind of have a taste for both. I was also a consultant back in the day, so I got to spend a lot of time with companies. I think there's always been a perception, certainly, at least if you turn on CNN or something, that you have misdeeds or fraud. Obviously, we have trial going on right now and all that other stuff. But I mean, I woke up every day and saw the London Whale or like UBS account. Effectively, for me, it's been a consistent kind of theme. And generally, what I've found is that you have new entrants, and the governments are very, very flexible. They want to encourage that innovation to a certain extent. And then what happens is when you start touching certain large numbers, once you get to be a certain size, you get attention. And both that's from a size perspective as well as another perspective, which I would say is the DeFi area, particularly when you're working with customer deposits. So if an institution wants to open up an account in Switzerland, very easy to do. If a company wants to launch a DeFi protocol on a Swiss license and then try to pull in US retail banking consumers in a traditional sense into crypto, you start to suddenly find that friction, and it's definitely a challenge to mirror. I think, I've told a lot of the people I work with in Web3 about kind of my TradFi experience, which always shocks them. So like, what I'm used to when you work with customer deposits. So my Monday at JP was 22 different regulatory agencies overseeing me. It was turning my cell phone in and having all of my messages lifted by corporate. It was having every email you've ever written, every message you've ever written being sent to the Fed on a 30-day rolling basis, every phone call you make being recorded. If you want to start a company and you want to work with customer deposits, they're going to want you to physically be located in the States so that if there's a disagreement with you, they can talk to you about it in person for a very long time. So things like that. And how you kind of mirror that with the decentralized piece creates both friction and opportunity. I think it creates friction because a lot of Western entities really, really want an iron fist of control, particularly through their perception of protecting the consumer, which is very, very important to them. But that entire process is extremely inefficient relative to, say, if you're building a DeFi protocol on chain or you're building an insurance contract that's tied to an oracle, your cost of service and the value that you provide to the customer, oftentimes 20, 30, 40 times higher, very impactful. But part of the reason why it's so efficient and the return is so high is you don't have a giant customer service and legal apparatus managing query kind of 24/7. So I'm not sure exactly what the future will hold, but I do think the L1s that are going to, or even just, I would just say the blockchains in general that are going to be able to adapt, I think, to that reality the quickest are the ones that are generally tied to an exchange. Because the ones that are tied to the exchange have to deal with the reality of working with those government and entities globally and keeping everybody happy all at the same time, and working with customer deposits. So if you're already doing all of that, it's very easy for you, I think, to do kind of everything. The flip side is that then you begin to be perceived as Mr. Centralization, super kind of biased and only kind of interested in your own kind of internals as opposed to working with the community. So no matter what you do, everybody's going to be unhappy with you. You just got to try to find your customers, do the right thing for them, figure out kind of the best way that you can serve your market, and react, as everybody said, right, to the coming regulatory onslaught.
That's a great phrase to end your comments. So I want to get a show of hand perhaps in the room as well. Do you think we will see layer ones, of which we have truly many, consolidating in the next, say, 5 years? Yes? Andreas, yes?
Yes. For sure.
Possibly. For the record, I'm not here to talk about the consolidation with Cardano. I deny that. But I would say, I think the future is not just about, the consolidation is just one way, but I think more importantly, blockchain is an open and inclusive space. It's not just like about a competition or tribally, it's more like how are we going to work together? Because eventually, this is still very early stage of the entire industry. If, let's say, we all believe, I'm sure, as players in the crypto market, we all believe blockchain going to reshape the future, going to be like next level, next generation of internet. So that means you got to impact everybody's life, right? Serve everyone in the daily lives. So we're talking about the billions of users. And it shouldn't be just a single one's job. It should be a collaborative jobs. So I would, let's say, call for more collaborations. It doesn't matter you build on Cardano, you build on VChain, you build on Solana or Polygon or Ethereum, whatever. You know, if we're able to find a way to align the users to do the right thing, you know, aiming for mass adoptions, creating the value for the real world, then why not?
I mean, I kind of agree with you, and in principle, that would be the ideal situation. But you have to consider one thing. I mean, this economy or this business is different. And why is it different? I mean, I often compare it, those layer ones or the individual chains, they're pretty much like nation states. They have their own governance. And how easily can you actually merge two nation states? How easily is that done? I mean, I don't think that's simple. So they believe strong in their origins. They believe strong in the technology. I mean, the technology that we all agree, that's cool. But they will not mingle between the protocols. And that's going to be like the community would, I mean, they would bloody burn the house. Huh? So it's a challenge.
But still, you think that a federation of type of consolidation does have to happen, even though it's difficult.
Yeah, absolutely. And you will see it just by nature of if the bear market continues a little longer, you just see that more and more start to disappear. And this is just a natural cleansing exercise, but it's not going to be a merger or consolidations. I think some of them just disappear. And then they jump or consolidate in other ways by just joining other layer ones. But it's not that we're going to bring them together in a way like you would in a traditional way in a merger. I mean...
Yeah, I would rephrase a little bit the question into the following, or the answer into the following, not focusing directly on consolidation itself, rather on what is happening right now with layer ones is the race for mass adoption and the race to set a certain focus / USP, so unique selling proposition, as a layer one. Yeah, so it's another picture is like cars. Yeah, so like in the last years we had cars and all of them looked kind of the same. Like when you look back at cars like 100 years ago, all those cars kind of looked the same. And then after decades, you got your, I don't know, your sport cars, you got your SUVs, you got your, in addition, then different brands. And a Volvo has completely a different brand than, I don't know, a BMW or a Ferrari. Yeah? So, and this is something that I'll see as well for the layer ones, that all of them will pick their space, different USPs, different topics, generate a community for those topics. And then the users or employees or community in general has many worlds than maybe. Yeah? So for sports, they like one layer one because they're very good in sport. For another sustainability, maybe they go into another layer one. For, I don't know, for other leisure topics, they got another layer one. So basically, as a customer, you have then various layer ones, and they stand for various topics, various brands, like cars over the last decades or centuries almost. Yeah.
Question now is, who's the Ferrari?
Well,
choose wisely now.
Not decided yet, I would say, but the race began. Yeah, actually, over the next 2 to 3 years, who will make the race?
I actually like that analogy the more I think of it, but I've had a bit of a different experience. I'd say I like that the L1s being a car is a good analogy, in the sense that all the automakers are united to make sure that they're all trying to address regulation or climate change or something like that. But BMW is definitely competing with Audi. It is not it is not necessarily a community hug, if you will. Depends on the chains. Some chains are much more combative than others. I spent about 2 years in the battle of the chains at the time. I'd say too the bear market's quite interesting. Take like say like Aptos and Miston Labs, which I'm a big interested in following them from a technology perspective. They both got, I don't know, $300 million checks relatively recently, right? So at the top of the valuation, the top of the market. Generally, the way that at least it was explained to me is they measure the chain by users, TVL, some sort of transaction volume. Very, very rarely, in the vast majority of the cases, are L1s revenue positive at this stage, especially in the middle of a bear market. The more activity you have, you get enough gas fees, and eventually powers through. But the vast majority of everybody that I know is pretty much on VC funding, waiting to get mass adoption that then flips the economic model. Mm-hmm. So you've got a ton of people out there with relatively low head count, a few hundred million in the bank, and 5 years from now, right, if you've burned through that 200 or 300 million and you don't have $300 or $400 million in revenue from the gas fees, there's just economically you won't make it. There's also another interesting stripe as well. I think using the car analogy, generally the use cases that we see, at least that I see, that generate the majority of gas fees, typically uses around DeFi, some other use cases on some of the gaming pieces. But in terms of that revenue generation, it's typically kind of concentrated in those areas. If you think of some sort of mass adoption, like for instance, let's say every fashion house in the world stopped using barcodes to manage inventory and switched to an NFT process. And now suddenly you had 300 million NFTs that are being processed every day, and all the major fashion houses chose one person or one chain to process that entire transaction volume. And the entire transaction volume of that one instance, that one industrial change, would probably exceed the vast majority of the total transactions that are happening on many of the L1s today that are just in the VC model. So it's a combination, at least in my mind, of like, do I have the right tech? Am I serving the right community? Do I have enough runway to survive? But then beyond that, if you get any kind of major mass adoption, right, you might be the first person with a Tesla 10 years ago, but then when suddenly everybody wants one and that's the thing, if you're the person who's there and is able to capture that element, I think whoever is there to grab that first movement in that piece of the pie could end up being one of the largest players out there.
Mm-hmm. And I guess you have to be ready also, like from an operational standpoint, like more than a technological standpoint, when you get that amount of sort of requests coming in. If you were an L1 that doesn't have a USP right now, and maybe doesn't have the best community and best branding, is there time for you to fix these issues in order to survive this next phase?
A quick answer, yes, do it now, because the race began. The race for mass adoption and for also playing into the traditional world / regulatory world started already, and the next bull market is hopefully coming soon. And when this happens, then a lot of additional users, mass adoption in general might happen. And for this, you need to be prepared, not only for governance and processes and regulators and so on, but also for your USP and your marketing you stand for. So do it now.
Today.
Yesterday.
Yeah, I think a couple years ago would have perhaps been even better. Okay, one last thing I'd like to touch upon, and we touched a little bit on this earlier, is the Swiss foundation model. I know we have some people here that operate this model. Either of you, would you like to explain to us how it works and why it works for you?
Well, being Swiss and being part of a Swiss foundation, it's kind of the obvious question to answer, huh? So I'll try. In the typical Swiss way, neutral, huh? No, but to be honest, I mean, the main advantage you might want to say about this model is really that it has no owners as such. So by that, it's not driven in a way from an ownership for going for like making profit and squeezing it out. So we are not-for-profit foundations in Switzerland. They have a clear mission, and as part of that mission, they are not like incentivized and pushed by remuneration models or by crypto price as an example, but by adoption. And that's the ultimate goal, is we want to drive adoption, and clearly by mass adoption, the price will increase anyway. That's part of the economy, but that shouldn't be the ultimate goal. And I think the Swiss Foundation model is a very attractive model at this stage to help the cause. It might change, maybe in 5 years there will be a complete new model that will change everything, but for now, I think it's quite good.
Does everybody agree? Like, is this, I know according to BCG's report, 61% of L1s use this model. What does the other 40% do?
Well, it of course also depends where the founders are located. It also depends where the main community is located. Yes, Switzerland is a great place to be for exactly the reason that Andreas just mentioned. But it also depends on, let's say, local proximity. Yeah? You can do it in the following way. You have your Swiss Foundation as a backbone, and then you have various hubs across the globe. But if your main community and the founders and everyone is based somewhere in Asia, the other percentage points, they're across the globe for those proximity reasons. And this is also a very strong and good reason because, what I said before, you have to engage the community as well, and you have to treat your community nicely as well. So it doesn't make sense to go from, I don't know, South Korea then to Switzerland, even so everyone is in South Korea. Yeah?
Yeah, I think there were 2 points. Firstly, regulation has made so much progress already. Like, if I look back 10 years ago when I started, like, this is wild, wild west, like a desert. But now it's different. Different places has been launching, let's say, different regulations very quickly. For example, the major milestone, maybe it's January 2024, like MiCA is going to be effective in Europe. But I think Switzerland has been addressing a very, very key challenges for, let's say, the crypto world, the blockchain world, which is traditional enterprise organization or governance, and also the DAO, that kind of model. So it's always a challenge in like, okay, listen to, if we think about a company, the ultimate decision maker should be a shareholders, right? But in the community, in the crypto side, it should be the community members, it should be the general entity, or not entity, it's like a whole of all of the community members. While Switzerland has been built, let's say, I don't think it's yet, but it's already like in the exploration phase, to find a balance between the traditional governance and also the DAO, that kind of governance. So I think that's the most attractive part. But the other side is blockchain is quite an open space, right? Everything is open source. So that means maybe after MiCA, Europe would also look at that part of regulation in Switzerland, could also do the same, which I think it's a key, or let's say fundamental element to push the entire industry moving forward, because we're learning from each other, we get benefits from each other. So yeah, that's my takeaways.
All right, thank you guys. I think we're on time. The timer is telling me we have 4 seconds. So thank you so much for joining us and for sharing. It's been a pleasure having you, and thank you everybody for listening. And thank you to Cardano for hosting us.
Thank you very much.
Thank you.
Thank you.